Well, hey, thanks for joining us. We're going to continue and maybe unpack a few of the things that Mike talked about during his session. One of the things I love about having Mike here at this session especially is the scorecard. And so he starts out with a scorecard. He gave himself a B-. I got to tell you, I think he crushed it for the most part. Although setting S&P at 5,000, and unemployment below 5%. Okay, that's sandbagging.
Yeah, you know what? Yeah, I read what I told Andrew. Actually, I said 4.5% in the paper, so I guess that
right.
That's on record.
We'll give you that.
I better go back and edit that.
We'll give you that.
I couldn't remember it when I was doing the slide deck. So,
nice job as always, and we're always delighted to have you and your insights. So, let's just set this up a little bit. There's lots of seats in the front row, guys. Lots. Unbelievable amount of seats at a discount. We're going to set this up a little bit for southern Wisconsin, so let's call it Milwaukee, Madison. So one of the things that when we're talking to our clients, really throughout Wisconsin, but predominantly in the southern half, is we had a really good year in 23, came off a pretty good year in 22, and as I start thinking about 24, I'm nervous, despite the fact that everything is pretty good. I mean, supply chains have returned, not to normal, but it's closer, it's more acceptable. The whole labor animal, we've kind of figured out for the most part. We've been dealing with that for close to a decade with a lot of the same issues. We've seen this demographic shift. We could predict it almost 15 years ago, and we haven't done much about it. It seems like that I think we're making some progress. What was curious to me is some of your comments around labor, and I love the prime and choice. I'm in the choice category. When are they going to change that, by the way? Because I think that's like a 50 or 60-year-old measure.
Right.
25 to 54 is prime, and then everybody else kind of dies?
Yeah, well, choice is just that next 9 years, and then after choice, I don't know what you call that, but yeah.
But do you
They're ready to take it off the shelf.
But it's an interesting question, because if you think about where we think the economy is going to go next, and the labor shortage or the lack of qualified labor, don't you think that choice category, we're defining it here, and I fully expect to see that on your slides next year. Don't you think that choice category is going to go out into the late 60s? And isn't that going to be a necessary component of a fully functioning economy for the next decade?
Yeah, and that's the pickup. So that lower panel wasn't choice workers, it was people beyond choice. So over 65 labor force participation has been steadily growing. And I expect that to continue just because people are living long. A lot of the jobs today are service, white collar, so not so taxing on you physically. I think people like the relationships they have through work. So I think that will continue to grow, and so that may offset a bit the problems that were being highlighted by Dr. Barnhouse about the diminishing number of high school graduates, but probably very different skill sets that you have between older workers and younger workers, but experience also is a virtue, and work ethic is a virtue. The economy is really strange right now, and I alluded to this, and you were mentioning it. I think the pessimism that exists isn't really consistent with the economic data. I mean, it's just historically low unemployment rates. Wages have been catching up. Yes, people see that prices are higher, and maybe the wage inflation hasn't yet caught up to price inflation, but it is now. That gap's being closed. Equity markets are at all-time highs. How could people feel bad about this situation? And I think it is the uncertainty of the geopolitical environment, concern about what could happen if things really do go awry in the Middle East with oil prices and other supply chain issues having to do with shipping over there. And then also the election where, as Aaron was saying, and I alluded to, when the political parties, at least the candidates, were putting forth from the parties today are so far apart. I mean, that's maximal uncertainty in just about every election, you know, whether it's a state election for governor or a national election for president. We just don't seem to be able to nominate people who are closer to the center. And I don't really have, well, there are a lot of people who talk about what solutions to that might be. Some people in Milwaukee have been pretty involved in trying to promote ranked choice voting, Catherine Gale and Austin Ramirez and others, and hats off to that. I mean, I think that would be an important development. You know, and I'm not saying, I'm not questioning anyone's politics here. You know, I'm sure there are fans of former President Trump, there are fans of current President Biden, but I just think for most Americans, we're all closer to the 50-yard line, and it seems like a lot of our elected officials are pretty far from that. And it's, you know, you see it, you know, it's probably a manifestation of social media, maybe other things, maybe even international interference in social media that, you know, spreads a lot of disinformation and gets people worked up. And, you know, I'm in an interesting job because I try to raise money in part of my job from high net worth people, and they're kind of split pretty evenly between Democrats and Republicans, and I feel like they're all responding to the most extreme thing about, you know, the other side, and, you know, I get pinged quite regularly with how each of them sees the world, and they just don't have a lot of facts in common anymore. That's a problem.
I'm going to stay away from the election one because it's just, you know, I might come back to it later.
Yeah, it's just, I think it's the thing that creates a lot of uncertainty in addition to the geopolitical arena, and that's the only way I can reconcile, you know, why would people be saying that somehow we're pessimistic? It just, in the economic data, you can't see it, but I think it's these other things that are just gnawing at people and bothering them and making them a bit unsettled.
Yeah, got it. So, I mean, let's stay on labor for maybe just a second. Labor, education, immigration. How do we change the current education profile? And let's just call it in, you know, Wisconsin for today. And then maybe figure out an immigration policy that actually works, that could make, you know, some of that, if it's 10 million illegal immigrants or whatever we're calling them today, more productive as part of the domestic economy. I mean, do you see a path? I mean, how would we do that as a nation? Any idea?
Well, a political expert just walked in the back, so we should ask Dale. But I wish I could design an immigration policy for this country. First of all, I support legal immigration. And as a country, we should recruit people like the Wisconsin Badgers recruit football and basketball players. I mean, we are in a pitched global battle for technological dominance, and that is the currency of the realm in global leadership, and we cannot afford to be, you know, foolish about this issue. So, number one, I think it is trying to recruit the most talented and motivated people who want to be part of a free and democratic and capitalistic society. And number two, we can't throw the baby out with the bathwater. Having the best research universities on the planet has been incredibly important to this country. And for whatever problems they may have right now, those problems pale in comparison to what would happen if we allow other countries to wrestle that dominance away from us. That would be a huge mistake. So I think, you know, immigration and education are really at the foundation of our future success. Demographics, harder time managing, you know, how many kids people have, you know, so I don't know what to say about that, but, you know, there is a bit of a cliff, I guess, in high school graduates, but I've always said, even about Wisconsin, it's not about growth in the Wisconsin population or labor force, it's about the quality of life we enjoy, and, you know, there's plenty of people here now, lakes are crowded enough, I don't really want a bunch of people moving up from Chicago. Okay, maybe some of the best ones, but you know, and I realize people in Illinois and Minnesota want to flee the problems that their sports teams present for them on weekends. I mean, it's just so great to be in Wisconsin, isn't it? I mean,
It's fantastic.
how are the Jets doing, by the way? But anyway, you know, you know, we have a great state, and I think we should be focused on, as a state, not so much growth, but upskilling people and having a high quality of life and level of income per capita. I think that's really the foundation of people's satisfaction.
You mentioned, and we've talked about this, where consumer sentiment continues to run high. We'll see what Michigan, the Michigan survey comes out with recently. Obviously, Christmas spending was pretty good.
Mm-hmm.
How much further does the consumer have to run, given wage gains won't be quite as great?
Mm-hmm.
Maybe, I've seen credit card balances are maybe adjusted for inflation, just sort of at pre-pandemic levels. They're not like notably higher.
Yep.
Delinquency rates are starting to come down a little bit.
Yep.
You noted, net worth, whether it's households or 401ks, people feel good.
Mm-hmm.
The three legs of inflation, rents, services, goods. Do you see any of those being the biggest concern? Of those three legs, what concerns you the most about continuing inflation?
Yeah, I mean, the inflation is really in the service sector, and that's driven by wages. I mean, that's really what the service sector price increases have to be for people to maintain profit margins. So I think there are still problems there. I think, a lot of people, I'd say the key employees in the hospitality industry, that was shut down so long that the most motivated and talented among those employees probably thought, you know what, I don't really want to be in this sector anymore. And so then when you start it back up, you probably are missing some of your best people. And so many of those businesses are still limping along. A lot of my favorite restaurants in Madison aren't open as much as they used to be. It's the way it is. And so we still do have shortages in some of those sectors. And that leads to higher inflation there. But I think rents, I don't see that being an especially challenging problem. And I think, as you note, people's balance sheets, household balance sheets, are pretty good. And that household net worth number, that's about a 6-month lag. That's the data series that comes out with the longest lag. And so that's not picking up the back half of the year where there's a pretty good equity market rally and early this year. So consumers today have to be sitting in a pretty good spot, even relative to 6 months ago. So, and wage gains are now bumping out ahead of price inflation because the commodity and energy prices have stabilized. And so, barring some catastrophe in the Middle East, I think things look pretty steady right now.
Is there something in the employment data that if it hit in the next few months that you'd be really, really worried about?
Well, the one negative part of the last employment report to me was labor force participation ticked back down a little bit, and I don't really know what to make of that. That could just be, month to month you're going to have some random variation. So I don't think it's going to be a big problem, and it may have been related to more businesses wanting people to come back to a greater degree into the office. I don't know how that's going to go. We had a 2-day in-person all-staff conference 2 weeks ago, and I think people were like, man, this is great. But in our hybrid work mode, we're asking people, we're a financial services business effectively. I mean, we have salespeople, they go out and sell, we collect money, we invest it, and we pay it out. So we're kind of like an insurance company, a foundation. It's same kind of business. And for most of the people in my business, they really don't need to all be in person at a physical location for us to function anymore. Everybody's working on a computer. And for some jobs, you probably have more productivity from home because you're not getting interrupted, and you don't have to talk about the Packer game with somebody. You can just think about it, stuff like that. my president always says, we're missing these spontaneous collisions at work where people have great ideas. I'm like, the only thing I ever hear when I go in the men's room is guys are talking about sports, But sometimes, obviously in person does help for certain things. But what I learned from that is if everybody's back, it feels pretty good. But if I go into my building and it's 30% full, that actually is a negative for me. Like, I don't even like being there. It just, it takes energy away. So, I think we may end up doing more, everybody's in on the same day, and it's maybe not 2 days a week, but we have that energy and connection and kind of renewal, because that seems to feel good. And then, if you want to come in more, great. But yeah, it's that's kind of an interesting phenomenon to me. And so I do think if you try to force people back in, we're going to have a little bit of attrition from the labor force, and that would, in my opinion, be a bit of a negative. But every employer's got to make their own call on that, and I wouldn't judge anybody else. But I know for us, in a large nonprofit foundation, 70% of my workforce is female, and a lot of them are part of families. And you talk about a part of your workforce that really values that flexibility, and I actually have a high level of trust that appreciation of flexibility translates into more commitment and productivity. If I was 70% guys, I don't know if I'd be saying that. I don't know what they'd be doing all day.
There'd be a hell of a lot more sports talk.
Well, maybe. Yeah, maybe. I don't know. But I think it's working well for us, but may not be for everybody.
Let's shift gears to let's shift gears to the Fed. So, Fed Chairman Powell has obliterated the concept of, hey, we're going to get down to 2%. Hell bent on it, hard stop, mic drop, leaves the room. And yet the market doesn't believe it. The market says, whoa, wait a minute, hey, look, inflation's coming down. Are you really going to get to 2%? Or can you start giving relief? Given how long he was, hold on. There are some that would say he lagged too long before starting the interest rate increase. Mm-hmm. Is there a danger for him to wait too long to start signaling to the market, hey, you know what? I think we can start dropping a quarter at a time. What's the danger?
Well, the danger would be if we thought that the economy was softening, he'd probably need to start cutting. But I think, one of the reasons inflation can be stubborn is if people don't believe it's going to come down. And so it's in the Fed's interest to always be sending the signal, we're getting inflation back down to 2%. And, the risk of saying that when you're not really super committed is, over a long period of time, people will begin to question the Fed's credibility. But again, I sort of think all market participants understand this was an extraordinary period. The problems weren't caused by the Fed. It was a global pandemic. Cut them some slack. We're going to get back to 2%. It seems like markets believe that in the TIPS market, because if inflation's going to average 2.15 over the next 5 years, you got to believe we're spending sometime below 2, because we're starting at 3.3 or whatever we're at today. So I think people believe the Fed's going to get rates down. That's a healthy thing. That helps get inflation down. People believe the Fed's going to get inflation down. That belief itself helps get inflation down. So I think the Fed has played it really remarkably well. You look back on what's happened over this period in the United States economically versus other countries. It's kind of hard to say you'd want to trade places with anybody. Some of that's just because of the health of our tech sector and how important that has proven to be during this period, as we shifted to work from home and everything else. But I think the Fed has managed this really well, and they've had to kind of compensate for a fiscal policy run amok during COVID because, a sitting president has to try to give away goodies as you head into an election, which happened, and then a new person gets elected, they have to give away some goodies because, they haven't had a chance to do that yet. So if we had had one presidency spanning the entirety, we probably wouldn't have had as much government spending. And the Fed kind of had to undo some of the effect of that, or the economy would have run even hotter and inflation would have been even higher. So I think the Fed really did manage this period, in my opinion, extremely well. I would give them an A.
I was going to ask you that.
I'd give them an A. Yeah.
I still think you gave yourself too low of a score
well,
on your current forecast.
What I give myself doesn't matter anymore.
Well, that's probably true.
The whole grade is Dan going to invite me back?
Well, hey, apparently
the guy apparently doesn't know anyone else.
Apparently does.
Give him a lot of suggestions.
I would continue to pull on this thread because you were pretty deliberate about saying in your forecast for 24, if the Fed is patient.
Mm-hmm.
And
Yeah.
so, as soon as you said that, I'm thinking, okay, so not Greenspan when he dropped it really, really fast, and then that led to a recession.
Well, what I mean by patient, I mean patient about the inflation coming down to 2. So, in other words, I don't think they should be hiking rates anymore. I think they should be done with that. I don't think they need to be in a rush to cutting rates, but, if they do, they do. But, I would hope the rate hiking is over. And, if something happened to energy markets because of a Middle East flare-up, would the Fed think they have to increase rates again? If that were the case, then I'd say maybe my forecast is a little rosy. Because if the Fed starts going back up now, then I think a lot of people will start to wonder, oh boy, what's going on here? And that'd probably be bad.
And the same is true if they dropped rates too fast, right?
People might read into that something.
Yeah.
That the Fed knows more than we do, and times are, the economy's really soft, but there's just no indication this is a soft economy.
Yeah, right.
Now.
I
agree.
especially
in Wisconsin. Unemployment in Dane County, I think, is below 2%. You can't find workers really. So
time to sell a house in Dane County.
yeah, maybe.
Don't leave Rhinelander yet.
Yeah.
Let's shift to what you just started talking about, and I'm going to put this in the category of geopolitical supply chain distress. World War III, I think, is the caption that you maybe put up there. As you forecast out 24, I suspect you're not predicting any of those outside events actually occurring.
Right.
Which of those outside events occurring has the greatest likelihood?
I think the flare-up in the Middle East, I'd say right now, Russia, Ukraine just looks like it's kind of in a steady grinding standstill. And I was probably more worried about escalation in the first few months because, it was hard to feel certain about where it could go. And the other thing in the last few months that feels better to me is there seems to be a little bit of a de-escalation between the U.S. and China on certain dimensions, and that I think is helpful. So it looks like the place where things might still, the temperature's getting hotter is still in the Middle East, and that is, I want to be totally clear. I have no thoughts that are any better than anyone else about the probability of that, but I think if it does get worse, we understand what that starts to do to oil prices and how that can kind of ripple through the economy. We're, still somewhat dependent at the margin, and certainly allied countries are much more dependent than we are. So, that has a meaningful headwind for the rest of the world. But, if things are contained to Israel and Gaza and, that's such a small share of the world economy. While it's a human tragedy, for the global economy, it's kind of a non-issue.
What about China, Taiwan, with the recent kind of change there? Are you concerned about that?
Long term, yes. Short term, not as much. But Chinese leadership is very long-term focused, and they have a lot more strategic continuity than we do. And again, I wouldn't take my personal views, very seriously on that. Although I do get to sit next to the former Supreme Allied Commander of NATO at a board meeting once a quarter, and kind of based on his assessment, I don't think it's like the next few years anyway. And there does seem to be a little bit of rapprochement. I think there's more communication, at least more constructive dialogue between the U.S. and China right now than 6 months ago.
Yeah.
So that I think is helpful, but is that some kind of Ali rope-a-dope maneuver? Who knows? They're strategic, so, and ideally we would be too, but it's hard to be as strategic when you're a democracy and governments are changing all the time. I mean, allies are getting whiplash, I think, with us, and that doesn't make me feel good. And we, as I alluded to, we had strong economic dependence on China. And I think the Russia-Ukraine, conflagration, what that really revealed is, a lot of the developing countries, even big ones like India, they don't really want to take any sides. And I think for a lot of us, it's kind of like, wow, you're not taking our side, like you're more willing or as willing to kind of be aligned with Russia as us. But, we really haven't been great to a lot of the developing world. And, South America, it's not like people love us down there. And that's really kind of a shame because, the biggest gains from trade are, for an advanced economy like ours, are with an economy that has really low labor costs, a developing country. Because they can do things much more cheaply in certain areas that creates really beneficial trade. I mean, the U.S. and Canada having a free trade agreement, the reason it's easy to negotiate that, it's a non-issue. Like, we're kind of the same country. It just doesn't change the opportunity set much. But the U.S. and Mexico, that's a really interesting trade opportunity. And we probably need more diversification in trading partners and alliances that way, in the same way we should have more diverse supply chains. So I think that is a missed opportunity for our country, but easier said than done. I don't really know how to build global relationships. So
Let's talk about that for a minute. I mean, so obviously the domestic economy is, my word, smoking hot. The other parts of the world don't seem to be faring as well. Is globalization dead?
It's not dead, but definitely it's going through this adjustment period because of the way we responded to the Russian incursion in Ukraine by trying to cut them off economically from the rest of the world. Naturally, a lot of other countries are like, I wonder what we might do that the U.S. wouldn't like, and then would we get frozen out? And so I think that kind of sends a bit of a chill through the system of global trade in capital and goods and services. And everybody starts thinking, well, I don't want to be too dependent on, other people for my stuff. So, but it's not, we're not going from 100 to 0. I'd say we've gone from 100 to 95 or 92, but, that'll have a cost. There was a reason we did all that outsourcing. It was more efficient, but it had a level of risk that we probably weren't factoring in, and when that risk materializes, like it has in some cases, we at the foundation had invested in a bank in Russia that was a bank with no, they had no physical assets. It was a complete online bank, Tinkoff. Great company. Well, would have been a great investment, but guess what? It's now worth 0. Maybe at some point they're going to list in Hong Kong and we'll be able to get out of that. But the bank itself is doing fine, but we can't trade. So that happens. So you learn a lesson, and then you start to ask, could that happen with China? So then you start looking at those investments, and does that make sense? And so we've definitely pared back our position there, and there's certainly talk in policy circles about whether some people should be precluded from investing in China. And I've tried to convince Representative Gallagher that forcing universities to, have a fire sale of everything that we happen to have in China is just going to allow BlackRock and other people to buy it on the cheap. I mean, unless you're going to preclude everybody in the United States, I don't really understand why. Maybe say no new investments, but Anyway,
Good. We're about.
I got to go to Las Vegas.
Well, at some point.
Yeah.
I still have.
I have a
minutes,
few minutes.
so
Yeah.
Just keep right there.
I feel very lucky.
I want to open it up to any questions
Yes.
that you guys have, because I don't want to get to 10:25 and miss an opportunity to ask a question, and he really does have to leave at 10:30. So, any questions? Yeah, go ahead.
I'd like to touch on the labor
Yep.
points that you had brought up and drill down into that a little bit more. I saw a recent labor statistic on the labor participation rates for some of the younger generations that were brought up in the presentations today. Specifically, the 16 to 24-year-old labor participation rates being at their lowest levels since the 80s.
Yeah.
And so, being a small business owner and looking, on your comment about restaurants not being open,
Yeah.
a lot of these younger workers, that was
Right.
part of the labor participation. And this may carry over to the next seminar on education and business, but how do you reverse that trend to increase some of those labor participation rates, especially considering you're seeing a significant decline in some of those populations?
Yeah, and I think we'd have to look at the unemployment rate in that age cohort to determine, is the participation rate a result of people being discouraged because it's too hard to find jobs, and maybe minimum wages go up enough sometimes, then restaurants don't want to hire workers that don't have any experience, and so it can be complicated to unpack the reasons for that. One thing I can tell you, and part of that demographic, a big part of it is college-age people. And we are having a really hard time getting college-age students to work on our campus. And I think the reason I hear most for why that's happening is their parents kind of feel like, oh, these poor kids, they had the pandemic they had to go through, so they had this kind of crappy experience, and I don't want my kid to have to work now when they're at college. I want them to be able to have some fun and make up for that time that they lost. I can't tell you that applies to everything, but I think there's an element of that, certainly in the college-going population. It could be, on our campus too, part of it is the kids who are going to college, at least at Madison, we have more in-state kids than we've ever had almost in our history, but we also have more out-of-state kids. We've grown the undergraduate enrollment by 20%. The out-of-state kids who are coming tend to come from pretty high-income families, otherwise they wouldn't be paying out-of-state tuition. That's now up to $40,000 a year. So those kids are from families that they don't really need to work, so they don't. They spend, which might be good for the economy on the one hand, but then we can't staff the businesses, where they're spending. So yeah.
It was just a very interesting long-term
Yeah.
trend in this one webinar that I sat in on.
Yeah.
And, on the flip side,
And obviously-
my daughter just graduated from UWM. She worked throughout high school and college, graduated with no debt, right?
Yep.
And so the thing is that you hear all these stories about student loan debt and that sort of thing. It seems like a pretty easy solution.
Yeah, I mean, I think a lot of what I would be looking at, and I'll have to go back and look at that. I honestly haven't looked at that age cohort much in the data. I'll add that to my repertoire. Maybe I'll have a better answer after I look at more information. But obviously, most of the kids in that demographic aren't going to college. They're doing something else. And again, I still think the pandemic is likely to be kind of a huge factor somehow, and I don't know exactly the mechanism, but that's probably playing a role in how that generation is behaving vis-a-vis work.
Just to comment on that, the 16 to 18-year-olds, they don't even get driver's licenses anymore. You
Right.
talk about transportation to those
Right.
jobs, so it's not only kind of the interest level, maybe in participating in the workforce, but it's also the inability or lack of access to actually get to those employers. So I think a little bit of that, as we've taken, you know, the ability to get a driver's license out of the high school, now it's hundreds of dollars for these students to get a driver's license, and they're saying, well, I'll just wait until I'm 18 and I'll go and I'll maybe get it then. Well, getting to some of these employers reliably now becomes a barrier to employment as well.
That's a good point. Interesting. Yeah, that is a great point.
How prepared are the higher education and universities for the cliff, do you think?
Well,
follow-up question too.
Yeah, I mean, you can see we're getting more prepared with the announcements of closures of some of the two-year campuses, and so, you know, I think things will get right-sized. You know, the faculty cohorts are older, and there's probably looming retirements, and there'll probably be some buyouts. But, you know, in Wisconsin, you know, it's hard to argue that we need 13 four-year public universities. It just seems like too many. But like with military bases, nobody wants to propose which ones should be closed. That's a political problem. So, you know, we don't seem to be making headway on that. And you had a follow-up, and then I want to go to the back, too. There was a hand up.
Knetter or Netter?
Knetter, yeah, that's, thank you. Yeah, right. That's, okay.
By most indications, the macro economy is very strong. We have a robust labor market. Why do you think sentiment among mid and low wage workers is so negative? Is it stagnation in real wages? Is it something else?
Yeah, well, you know, I think sentiment in that group, you know, that's kind of the populism that I think we see today. So that is, in my opinion, more related to this long-term trend of kind of a bifurcating economy that has been really good with reliable, substantial compensation gains for people that tend to have more education and can work at, you know, white-collar jobs. And there's been, you know, a long period of stagnation in real wages for blue-collar work. And so I think that is a big part of that sentiment. Now, one of the interesting things about the pandemic is we did see the biggest wage increases in percentage terms were at the lower end of the labor market, but maybe, you know, there's still simmering resentment, and, you know, obviously probably didn't happen for everybody. So, but yeah, that's something I've talked about in the past at this event. You know, and there's only so many long-term trends you can cover when you're doing the 2024 economic outlook, but income and wealth inequality just continues to be a bigger and bigger feature of the landscape. And, you know, it's never been more important for people to get on the right side of the economy, so to speak. And that's what makes people really focused on, you know, is my kid going to get into college X or, you know, good college Y? And, you know, people really place a lot of stock in that today.
Question in the front.
I didn't have a question. I sort of had a comment or an idea, because I think that the view of work for that general age group has changed. Prior to now, we all say, oh, you work hard from the beginning and rise. You start working early, you make money, like he was saying. His daughter walked out through and doesn't have any debt. But right now, most youths want to be their own employer. They want to be making their own money, and it's in social media, it's every day. So most youths don't understand why I should go work for a guy for
Yeah.
that amount of money when I can go social media.
That's a funny
and
story.
make a lot more money. So that is contributing to the gap in that age group not available to work, because they're
competing for influencer status.
They're more aware about entrepreneurship, and they're more aware of information and going out there and working. So they don't really want to grind from the beginning of.
You know, it's a couple anecdotes close. You know, the person who's the president of our organization, you know, has a son who he's got a new idea every week about how he's going to be his own employer. You know, like, oh, I'm going to go buy these golf clubs from some guy that he's selling for $10, and then I'm going to bring it to like Play It Again Sports or whatever. And she's like, don't you think he's aware that the guy's selling the clubs for $10? You know, like, anyway, you know, so the kid would try a few things, and, you know, hit some black holes and not make any money. But then, I actually have a nephew in the Upper Peninsula of Michigan, and my brother, who is 15 years older than me and has never been on a computer a day in his life, is like, yeah, his grandson, Peter Knetter, he's like, yeah, Peter says he's making money on the computer. And this was like 5 years ago, and I'm thinking, maybe he's trading in Bitcoin or, something like that. And it turns out the kid he's got his own YouTube channel where he reviews games like Sonic the Hedgehog and Super Mario stuff, and he has now almost 1 million, not followers, subscribers.
Wow.
They made a plushie doll in his image. I mean, it's crazy. But the kid's making, $350,000 a year or something like that. And once a week he posts a review of some new or iconic old game and how you should play it and how he thinks about it. And I'm like, well, I can't even believe it. I've watched some of the videos. They make absolutely no sense to me. But I can tell he's kind of funny. He's got a bit of a following and a presence. But so sometimes it works, and people see the example that works, and you're making a lot of money, and that's probably going to lead to 5 kids thinking they're going to be the next person like that, and only one of them will, and then the other 4 will wish they'd gotten a job. But yeah, I mean, when I was a kid, there was nothing like that. I mean, a lemonade stand was the extent of entrepreneurship.
1026.
1026. Last question.
Can you talk a little bit about healthcare? And I know that you've been talking about it later, and we didn't really talk about that as far as where you see the costs and, in the 4 minutes we have left.
Yeah, missed opportunity when we reformed healthcare because nothing was done to address the supply side of healthcare. And that is ultimately the problem. We don't have enough doctors, we don't have enough nurses. That's the problem. And when people get bad care for cancer, it's because we don't have enough oncologists and they can't pay enough attention on a regular basis to the nuances of every individual case. And I've seen that up close and personal. It's really a tragedy. I mean, we have great medical professionals, but we don't have enough of them. And I think we make it too hard for accreditation and too hard for medical programs to grow. And we need to do something about that. But probably artificial intelligence is going to help that quite a bit. A lot of people that I talk to are much more knowledgeable than I will say AI will be able to diagnose cases quite reliably very soon because there's just so much information that AI can learn from about the data on a patient and then the diagnosis and the course of health. And so I think that will probably be an area where some of that pressure is relieved by AI.
Fascinating. Thank you.
Thank you.
I would love to open it up
thank you
more
all.
to questions, but we really do have to get him going. I appreciate always your time.
It is a pleasure.
The time that you spend with us, and next year I think I'd maybe open it up to questions.
364 dull days a year, just waiting for this. I'm telling you.
Thank you.
I appreciate it.